Hello everyone and welcome to your Glassnode video report for week 7, 2024. Now today we're talking about what I'm calling supply discovery. It's supposed to be a bit of a play on words from price discovery. And the logic here is that we have broken above the $50,000 price point. Now, if you think about whereabouts Bitcoin could have possibly been acquired at a price higher than 50,000, it's essentially the April to May and the November, December all-time highs that we saw back in 2021. Now, of those coins that were accumulated up there, very, very few of them are still held. A vast, vast majority of them have been redistributed, panic sold, sold during the bear market, and otherwise moved to a new cost basis. So with that as context, what we're looking at here, this concept of supply discovery, is the fact that there's not really that many coins that are actually still held. Yes, there was volume transacted up at those levels, but there actually aren't that many coins that were held above those prices. So we're kind of entering this realm where it's quite thin in terms of coins above us that are holding an unrealized loss. And in that sense, we're kind of entering this period of supply discovery, even though we're not quite there at the point of price discovery. So I'm going to look at this session from actually two different lenses. The first one is all about long-term holders, a bit more of a macro view. The reason I'm going to focus on them to start with is that generally speaking, we see long-term holders start to distribute and actually spend their coins at a greater rate as we approach and get up to market all-time highs. So we're really looking for what does that distribution pressure look like? They're coins that have been long dormant. The market has essentially discounted them coming back into circulation. Now, the other side of the equation, we're actually going to take a little bit of a step back and look at the short-term holders during the correction, the sell the news event that we saw back there after the ETFs. So the market sold off down to 38,000, and we had what I would probably classify as one of the most textbook bounces that we've seen in a long time. In many ways, it's a fantastic way to showcase how on-chain data, particularly from the short-term holder cohort, can be really, really powerful for those folks who are more active in the market, looking for these corrections and looking for these opportunities. So a couple of different concepts there, one from the perspective of long-term holders, one from the perspective of short-term holders. So a bit of a mix across the board. And I think it's just a great case study that we have in front of us to really understand how how can we use short-term holder metrics in particular to look for opportunities when we're seeing these uptrends. So just before we get started, as always, please give us a rate, a share, and a subscribe. If you do hit the like, it does help this channel get to more people, and it is much appreciated. As always, if you have any questions at all, feel free to drop them in the comment section below. And without further ado, let's get stuck into the analysis. Okay, so here we are in our week on chain 7 dashboard. We're going to start actually by just looking at things from a price perspective. We have broken to new multi-year highs. The last time we were up at this level, we were essentially coming down from the all-time high in January and early 2022. So we are pushing up to new multi-year highs, and effectively the reason why, I'll come back to this shortly, but short-term holders, the reason why they're such an important cohort to track during a trending market is let's think about who these short-term holders are. They are folks, in fact, let me just jump down to this chart here, which is going to give us an actual visual view of this. The red price zone here, this is actually all of the short-term holders. 155 days ago, we're essentially at the local low that we had back in September. It has been up only more or less ever since, with the exception of our correction, which we'll touch on shortly. So in order for anybody within this trend, given that we are now punched to new highs, for anybody within this trend to be in a loss, they would have had to either buy this local high and sold during the sell the news correction. There's basically nobody else in the short-term holder cohort that can be in loss. So that is why it's really important to focus on the short-term holders, because you're looking for local top buyers, and in particular, people who just jumped in at the wrong time. You're looking for that impulse of FOMO, which was then essentially rewarded with a price correction. And the exact same works in a bear market as well. You're looking for people who recently bought and are essentially panicking as the market trades down below them. So just coming back to this, if we just zoom across, there's only been 141 trading days in all of Bitcoin's history that has a price point higher than 50,000. It's about 2.8% of Bitcoin's trading history. So we really are talking about relatively thin air up here. On a grand scheme of things, there just haven't been that many trading days at this level. And what is quite interesting, here in the blue chart, we have our long-term holder supply. Now, back in 2021, we had a report called Following the Smart Money, which you'll find on our Insights page. And this really explored how long-term holders tend to ramp up their spending as we break all-time high. I'm going to zoom this one out on a 5-year chart. As we broke up to the 20,000 all-time high, we were in the process of and then accelerating long-term holder spending. Long-term supply decreases, short-term supply increases, and you get a transferring from old hands to new hands. Generally speaking, that occurs at higher prices. So you've got fewer hodlers, more new buyers with a much higher cost basis. The risk profile of the market goes up. Now let's just zoom in, because remember that GBTC is an important element to this whole story, has been for a very long time. It amassed about 661,000 Bitcoin during that 2021 run-up. Now, of that lot, those coins will be classified as long-term holders because we don't include those ETF products in our exchange bucket. So therefore, it will be in the long-term holder supply. So this little green trace that you can see here is essentially long-term holder supply excluding GBTC, because we know when those coins that are outflowing from GBTC, they are going to be going from long-term to short-term holder status. So let's remove those and try and assess how much long-term holder spending has actually happened by investors, excluding GBTC. So I'm measuring it actually from this November or December peak that we had here, the all-time high in long-term supply, which is just shy of 15 million coins. So between this peak and this green curve, which is essentially removing, pretending that GBTC is still long-term holder status, there's been about 148,000 BTC moved by long-term holders. These are investors. So about 148,000 Bitcoin have been spent by investors, and there's another 151,000 coming out of GBTC. So it's about a 50-50 split. So what we can kind of see there is about 50% of all of the long-term holder coins that have moved with GBTC. The other 50% were investors. Now, some of those investors may be taking profits now they've had such a fantastic year, both last year and this year thus far. There's also people who may just be opting for the ETF products. There may be some who want to rebalance for some custody diversification or for any other reason. There is likely to be a number of reasons why these coins are moving. So what we're really paying attention to, I think moving forward, A, is just to contextualize what's going on, but B, to see whether this long-term supply starts to cool down and start to trend higher again, because that would be somewhat of an anomaly, actually. It would show a very, very high degree of conviction. What we would actually expect to see based on prior cycles is long-term supply will probably start to decrease and move down as profits are taken. This will tell us something about the inflowing demand, because for every seller, there is a buyer. And we can also look at things like realized profit, realized loss, capital flows, these types of things. Now, moving on, talking about kind of supply, where is it? How is it all positioned in the market? The URPD, and this one here you'll find in our Glassnode engine room dashboard. This is for our professional and enterprise clients. So this one here is breaking down all of the cost bases of supply. So on the x-axis is price, and then on the y-axis is how many coins were acquired at those positions, and then by long-term, short-term, and exchanges. So basically bifurcating out the supply. Now, at the time when I took this screenshot, which was actually yesterday, you can see the price was down here at about 49,000. It is actually trading up here at about 50,000. So we've actually seen that there's actually fewer than 13% of the supply. So these coins here are the only ones that remain at a higher price point. Now, these folks who've bought their coins at 50,000, 60,000, almost 70,000, now I'm, putting a bit of myself in here. I don't know if I quite have UTXOs from 60,000, but I definitely have some from 50 and 55. I don't particularly care about those cost bases. So in many ways, these long-term holders, it's very unlikely that this was their only buy for the most part. The fact that they still hold on to these coins probably tells you they've got a bunch down here as well in these lower price points. So in that instance, this is a fairly insensitive price cohort, right? They've kind of seen it all. And at this point in time, I strongly doubt they're sitting there waiting for cost basis to basically take a break-even price. Very few people actually, some people do, by the way, actually hold their coins for the full 3 years and then take a small loss on the way back higher. But what we're basically saying here is that in terms of that supply discovery concept, there's just not that many coins with a cost basis above us who are price sensitive. So in that regard, you can see that the vast majority of the previous cycle is between that low down here at 15,000, here's the FTX low, up to about 45,000, potentially you could argue up to 50. This is essentially where Bitcoin supply lives and exists. There's obviously previous cycles down in those earlier price points, but we can really see that we've had a vast majority of coins have refound their position on their equilibrium level down here in these levels. And above us, there is very, very little supply left as what we could argue would be resistance. Most of the coins that are going to be resistance from this point on are going to come from these existing holders transferring them up to a higher cost basis. And in many ways, this is starting to get towards potentially another transitional phase, moving into that long-term holder distribution cycle, which we actually haven't seen more or less up until the recent weeks. So let's start with let's call it chapter 2 of this session, which is the long-term holder perspective. So in the broad scheme of things, here is long-term holder supply. We can see it remains at exceptional highs. Now, the red curve down the bottom here is actually long-term supply in loss. And you can see it has been in a very, very strong downtrend, recovering all those long-term holders who held throughout the entire bear cycle. We're seeing their position getting better and better and better. Only about 7% of their total supply is currently held in a loss. That's those coins we saw up the top there. Now, in terms of these like decays, obviously it will get to zero as we break all-time high, because by definition, every coin is in profit. But we can see that generally speaking, it starts to accelerate down towards that level. Now, previous points we've had a similar level was early in 2013, mid 2016, early 2020, and you could argue with the peak of 2019 as well. In most of these instances, it has been kind of in the lead up to a halving event or in response to a halving event, has been during a period of, relative market excitement. So we are seeing the overall positioning and the profitability of these long-term holders increase quite dramatically. Now for this chart, we're going to focus only on the pink curve here. So what the pink curve is showing of all of let's take every coin that's in loss. How much of it is owned by long-term holders? Now, at the very, very bottom of bear markets, these high values here, just about 100% of all coins in loss are held by long-term holders because the short-term holders have been completely and utterly purged from the market. There's no speculators left. It's only the long-term price-insensitive hodlers. So high pink values means maximum ownership of coins in loss by those long-term holders. And we've essentially been at that point through since the FTX moment. Now, what you'll also notice is that as the early bull market in 2016, in 2019 and 2020, and indeed in 2023, we start to see lower and lower lows. We see that this metric tends to start trading lower until eventually we crack the all-time high and it falls down to zero. Here we are in 2020. We get lower and lower lows, and then eventually it just accelerates and we crack down to zero. We are getting a very, very similar pattern where the long-term holder position is over time improving. They are owning more and more coins that are in profit. Overall, the long-term holders have essentially been rewarded for their long-term holding behavior and surviving the bear market, some of them from 15, from 20, from 30, all the way up to where we currently are at 50,000. So we're seeing their position increasing. And generally speaking, we're starting to get to that point where we get this acceleration as the market ramps up towards all-time highs. We're going to see long-term holder supply naturally go 100% into profit. And that goes back to my first point. From that point on, we really want to be looking at short-term holders because there's going to be long-term holder distribution pressure, but it's the short-term holders that buy those local tops. They are the ones that generally panic and create that acceleration to the downside. And that's why we're going to now transition across and look at the short-term holders for a bit more of a view on what goes on within the macro trend. Generally speaking, long-term holders are active around cycle extremes, and there's 3 of them I'll point out. The first one, near cycle tops. That's when they've distributed the maximum amount of coins, and that is generally speaking, they essentially are the ones that put the top in because they oversaturate the inflowing demand. They start that process at the other point, which is when we break or get close to market all-time highs. That's when their behavior really steps up a gear and we really spend a bit more time paying attention to their distribution pressure. And the final one is actually when we get to cycle lows, which is when those people who bought the top become long-term holders and then capitulate at the bottom. These are the first cycle. Most of us will have gone through that process. It's pretty brutal to buy the top, carry an 85% drawdown, sell everything at the bottom, only to see the market actually be at the bottom. Okay, so This final section is all about short-term holders. And I think that the recent correction that we had down to 38K in that sell the news ETF event, it has been what I would say is an absolute textbook demonstration of how we can use on-chain data to look for some kind of advantage, to look for opportunity. Now, there's a lot of psychological components here. This is not just Bitcoin. We just happen to be able to visualize these things much, much better using Bitcoin because we can see all of the coins moving. These mechanics will apply to any asset at any time, so long as human beings and our ape brains are the ones that are trading it. So what we're looking at here is short-term holder supply. And in the orange is short-term supply in profit. In the red, short-term holder supply in loss. So I'm just going to use this chart to demonstrate two different kinds of correction, pullbacks, sell-offs. The first one is what I'm going to call the garden variety. You can see that we get this spike in short-term holders in loss, and then it falls back down. We get a spike in short-term holders in loss, and then it falls back down. You can see there's many of these through the course of an uptrend. We can see many of these in 2020 and 21. This is, generally speaking, a garden variety correction. It occurs when people buy the local top, the market sells off about 50, let's just eyeball this thing, 50, 60, 40 odd percent, somewhere around half of all short-term holder coins go into loss. But there's still a lot of them in profit. So there's kind of an equal balance. The other one is when things get really nasty. This is when you're talking about 80, 85, 90% of short-term holders. Here is the 2021 sell-off in May, which really set in motion that bear market sentiment. Same again following the December all-time high. We can see again here in 2013. This is when the market changes gears. This is telling you that we have a top-heavy market, where of all those short-term holder coins, almost all of them just bought at the top. This is telling you have a top-heavy, very, very trapped cohort of investors. So two different frameworks. Now just note, we had a high-risk condition back here in August. The market sold from 29 to 26 in a very, very rapid succession. We saw almost all short-term holders. This had the potential to be a top-heavy risk vector. And of course, with all market conditions, we didn't necessarily see that one play out. But where we are at the moment, we've got something that looks a little bit more like one of these garden variety corrections. Now, obviously, now that we're trading at 50K and we sold down to 38 and up to 50, we can now probably more definitively say, yes, it actually was just a correction. But of course, this small correction could have also metastasized into something more significant, right? This is the variability of markets. But that's really what I want to set the scene with, is just bifurcating when we have about, let's say 50% of short-term supply going into loss, the difference when you've got lots of them going into loss. Why is this important? Because it's showing you what the crowd has done. When lots of people buy the top and then the price sells off, it's a bit different to when some people buy the top and then price sells off. You're talking about a much more holistic environment. And obviously, the larger that this is in terms of literal magnitude, the more supply, the more actual coin volume, the more actual investor count, the larger the damage actually is. So that's the psychological setup. And now I'm going to step you through a couple of metrics where we can actually refine this from a somewhat qualitative assessment to a bit more of a quantitative one. So we're going to go through 4 different metrics, and they're going to step up in different complexity and different components. The first one is just the percent. So turning this chart into a percent supply in profit oscillator. Now we've got the all-time average here in green, and then some plus or minus 1 standard deviation bands, top and bottom. The real takeaway from this is that during those garden variety corrections, all the way through the bull market, we very regularly come back and retest that long-term average. This is very typical. It's not a precise level, but it gives us something of a bit of a bellwether, right? We generally get these multiple retests and taps of that point. When you get the top-heavy bear market type environment, it gets sliced right through. Suddenly, you've got a huge amount of investors that are actually in loss, and note that it generally forms a bit of a resistance level. You will see this theme play out time and time again with these metrics because it's really describing that center point. Are we in a bull or a bear? What is investor sentiment really doing? And that sentiment is dictated, driven, focused on how in profit or loss are they. Profit and loss really are the components that drive investors to make decisions, to feel what's going on in the market. And that essentially, in many ways is a compounding effect. When lots of people are in loss, it generally creates more loss. When lots of people are in profit, generally speaking, it creates more profit. Sentiment, it kind of follows with the price in both directions. So this is just that first reference point that we've kind of got these baselines. And here we've just used an all-time average. Of course, there's going to be more precise levels and models that people can run, but just giving you a bit of an idea that we can see the difference between a garden variety correction and the start of a bear market. And you can see here, August had the potential to become a start of a bear market, but we did in fact see that reversion, right? So it's just about keeping those rules in check. Now, another way that we can plot this out is literally to take how many short-term holder coins are in profit and divide it by how many are in loss. So by that metric, a ratio of 1 means that you're at 50-50, right? So when we're more or less coming back and touching this green line, this indicator will be on this bound of 1. I'm actually going to turn on my presenter mode here to make this just that little bit easier. So as I said, when we're more or less coming back down and touching this this 50% bound, you're seeing that the profit loss indicator is also finding support. This is that equal break-even level. Note that once we break down below, this is now starting to become resistance. It generally flips character, and that break-even level is resistance, 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 until we finally crack through and you get these phase shifts in character. So if you're using these tools to assess market momentum, when you're looking for inflection points, for regime shifts, you can see that very, very early in 2023, this shifted from a resistance point to a support point. And that was overall telling us, and we can see the quality of this actual bounce that we had. As I mentioned before, it very much is one of these textbook events where we had almost exactly 57%, which is that long-term average of short-term holders were in profit. And we had the ratio come back and touch down on that break-even level, or the balance between their profit and loss. Now, MVRV comes into this picture as well, because MVRV for short-term holders is literally price divided by their cost basis. Now, what we can also see, if we just zoom out over the last couple of years, the same mechanics apply. So a level of 1 means that the USD-denominated unrealized profit held by these folks, we also came back down and tested their cost basis level. So generally speaking, these little undercuts here are actually very, very healthy. In many ways, the market has to go down just a little bit more in order to go up. This is when you start getting people who bought the local peak go into just enough losses that you get this panic event and people actually sell and capitulate the local lows. And in many ways, that's actually what establishes that local low. And you can see that throughout the course of 2023 and this cycle thus far, we've had several successful retests of that cost basis, which puts MVRV at a level of 1. And this event was actually no different. We had the correction down from the ETF highs. It traded down towards the short-term holder cost basis, and then we had a strong reversal from that point onwards. So again, we're seeing this thematic break-even level. Short-term holders during a trend really provide this nice anchoring point, whether it's their cost basis, whether it's their proportion of supply in profit, whether it's the percent of their supply that's in profit. There's a number of these metrics that always, well, they generally tell a very, very similar story. It's a consistent theme of what this, let's call it hot ball of money, is actually doing. What's their incentive structure? How much profit are they in? How many coins do they hold? What's their risk factor? And are we seeing a bit of a regime shift, or is it status quo and continue as planned? Now, the last one is to look at things from the perspective of what are they actually doing? So if we look at their amount of supply in profit or loss, if we look at MVRV, which is their unrealized profit or loss, these are all metrics describing their unspent supply, coins that are not moving. The other component is to make sure we look at what they are spending and what they are actually doing, because that action, that change, that is the delta occurring within the system. Are they actually reacting to those incentives? And that's where SOPR comes in. Now, SOPR, again, has a very, very similar mechanic. You're looking for in resilient uptrends. Here, we've actually got it on a 1 hourly resolution, so really quite zoomed in. You'll generally see during uptrends that it will use that level of 1 as support. Remember that undercuts of that level can actually be quite constructive because you're getting people who bought the local highs selling at the local lows in a panic. Now, remember, if the people who are holding profitable coins are spending, this metric wants to go higher. So it will signify profit taking during those upswings as people actually take money off the table. Why are these undercuts actually something that we want to be keeping an eye out for? Because the people who are in profit are slowing down or stopping their spending, because that would otherwise put pressure on the metric to the upside. And likewise, the people who bought the local top, who essentially FOMO'd in at the exact wrong time, they're accelerating their panic to the downside. So looking for these kind of, almost think about SOPR as the contrarian view. A whole bunch of people bought somebody else's coins. They were taking a profit. The people have held their coins long enough. They're taking money off the table. They're selling to somebody else who's FOMOing in with a bit too much excitement at a bit too much height. Just a quick note for the audience. If you actually look at SOPR relative to funding rates, they're a very, very similar chart. So when someone is taking large profits in the spot market, someone else is going very, very long, paying a high funding rate to do so in the futures market. All of these things speak to a bit of speculation and, people buying the local peak. Conversely, when you get those people actually selling the local lows, quite often that signifies you're getting to that capitulation point. And you're starting to see that generally it's somewhere around the short-term holder cost basis. You've come back and retested this balanced level of 1 on their profit and loss. There's a bunch of these metrics that help us understand when that enthusiasm and speculation has cooled off, but also some trigger levels to look for. What happens if we actually break below and find resistance? Therefore, you can start to flip your bias. So it gives you a bit of a gauge and a couple of these different tools to track how the market is performing, what investors are doing, and what are some trigger levels to kind of balance out what your expectations are and how we can use these tools to assess what's going on. So thanks for tuning in for that session, folks. Hopefully you found that useful. It is a powerful technique to really break down the market into long-term and short-term holders. Long-term are typically more active around cycle extremes. Short-term typically drive a lot more within the cycle trend itself. When we're looking at more fast-paced style metrics, a bit more active management, those short-term holder metrics are going to be really powerful with emphasis on that profit and loss domain. And for the long-term holders, generally speaking, they're a lot more about that macro view. What is the distribution pressure? What is the overall big picture capital inflows over a month-on-month basis? So starting to break down how we can use cohorts and different metric types to really assess different phases and structures in the market can be a really, really useful framework. So anyway, hopefully you found that useful. Let me know if you have any questions at all, and I will see you in the next one. Cheers.